Hello everyone. Beginners often ask, will I succeed in trading? Honestly, I can't answer that question. It will depend on you first and foremost. But I know for sure in which cases you'll fail. That's what we'll talk about in today's video. Watch to the end to find out the top 10 reasons why people lose money in the market. And to make it more interesting, I'll start with just $1 and let's see how much I can earn in the end. Let's get started. Today we are pushing from $1 with no indicator. Trading with different methods right now. I'll be opening a trade based on an uptrend, preparing for a breakout. This becomes clear if we break down the price movements. First, there was a strong bounce from the lower zone. Then, the price retested a higher level, exhausting its liquidity. However, the bounce turned out to be relatively weak. This is the moment when the pullback has completed. Typically, this is where most market participants start entering long positions. Stepping back a bit, you can see that the bulls have accumulated positions, pushing the support level higher. This level is exactly in the zone where I'm holding my contracts. While we wait, let me ask you a question. What do you think definitely can't a trade be profitable? What's that first thing that comes to your mind? Let's run an experiment. Pause the video and share your comments and ideas in the comment section. We'll check them at the end. I will definitely read them, but I'm sure answers will be, you can't trade in the raging markets or during news events. But those are effects. The real reason are different. Close the first trade in profits, guys. To properly trade this zone further, we'll need to zoom out for better context. Price movement from the past can reveal patterns that repeat in the future. This level sits in a consolidation zone. However, with strong upward momentum and previous test of this area, we can anticipate other market participants joining the trend. The entire wick range above this candle shows established price memory. Repeating this move becomes likely as accumulating by orders beneath, creating fuel for another upward push. Let's continue. I previously made videos about trading during ranging market and news events. If you haven't seen them, be sure to check them out. While those strategies come with their own challenges, they are ultimately about skills and experience. But there are certain situations where trading profitably becomes impossible, and that's exactly what we'll discuss today. The first such situation is when you hesitate too long before entering a trade. Trading while indecisive is a guaranteed losing strategy. Why? I will explain later. For now, let's prepare to close the position. Okay guys, the profit isn't substantial, but it's there. Let's switch to a different asset. This one has become so unpredictable. Alright guys, this situation just got trickier, but I believe we can still capture profits on the next upward push. Price is climbing now, but it's testing a proven resistance level where corrections originate. After the pullback completes, price typically resumes its upward trajectory. I've got about a minute to secure profits here. Do you notice the growing lower wick on this candle? That's our signal. The correction is exhausting itself. The best trades happen when you don't overthink, guys. When one glances at the charts, it triggers instant clarity. It's like the trade hands. You profit effortlessly. That moment of absolute certainty hits you. All doubts vanish and all that's left is collecting your gains. Doubt stems from either inexperience or an unclear trading system. When in doubt, what do? You wait for high confidence setups only. Perfect execution, guys. Another profitable trade. Current volatility is too low. We are seeing sluggish upward movements. So, let's switch currency pairs for better trading conditions. Well, I found the perfect setup for a short position. Watch closely. I'll be trading the head and shoulders patterns. Let me outline it so you can visualize the structure. First comes the left shoulder, followed by the higher head, and finally the right shoulder. The optimal short entry triggers after the right shoulder completes, and that's when we sell the currency pair. Each of these inflection points offer shorting opportunities. The key lies in both recognizing this candlestick pattern early and timing entry precisely. Now let's discuss the second scenario. When market conditions don't align with your trading plan, without this rule, your trading becomes chaotic and undisciplined. If you're a trend trader, don't experiment with counter trade bounces, especially at support and resistance level. When you have a proven trading system, just stick to it religiously. It's been tested and it works. If market conditions don't match your strategy, don't frustrate. Patience pays. Literally, just like this trade I'm taking now, profit secured again. I want to overtrade this pattern. My rule is 1 trade per setup. Now moving on. Alright guys, we've hit a strong resistance level during this rally. Typically, this is where momentum stalls as traders start taking profits and liquidity dries up. Watch how market participants begin unwinding positions as interest fade at these levels. The reaction is already here. Those red candles tell the story. While we wait for our trade to close, let's discuss another critical mistakes that follows from what we just saw. Breaking your trading rules by arbitrarily increasing position size to chase losses. Every trader faces losing streaks. But if after a losing trade, you spot a pattern and think, I will double down to recover my losses, shut down your trading platform immediately and walk away. No matter how perfect a trade setup appears, if you are feeling the urge to get even, you must avoid why emotionally charged. Greed will only dig you deeper into losses, but not this time, guys. Another decent closing trade. I believe we have another short opportunity here. This resistance level is unlikely to break. Price has been consolidating near it for some time now with no real follow through. Moreover, the long upper wick on this candle signals strong rejection, clear confirmation the barrier is holding. Here is our signal. Now let's continue. Another costly mistake is when traders blindly rely on overbought/oversold zones. Many strategies are built around trading these levels. But in reality, these concepts are highly subjective. They are based purely on our assumptions and hope for a trend reversal, not concrete price action. Through hard experience, I've learned that even when the stochastic lingers in extreme zones, a strong trend can persist far longer than expected. That's why, guys, your trading system needs confirming signals. Never rely on a single indicator. Here's another guaranteed way to lose money: hesitating on your entry. The worst mistake in trading is chasing price after ideal entry is gone. Watch this. I identified my trade with conviction, executed without delay, and locked in profits. Trading offers enormous potential, but first, you must program your mindset for precision. Now this pair is primed for downside continuation. Selling pressure is accelerating, and the reversal pattern is developing in real time. These red candles clearly signal bearish sentiment. The power uptrend has exhausted itself, hitting its peak. Buying interest has completely dried up. Decisiveness is non-negotiable. If you realize you missed an entry minutes ago and feel tempted to chase, stop immediately. Step away from trading. When you notice yourself consistently missing entries, your focus is compromised. That's another red flag to stop trading immediately. If missed opportunities become habitual, that's critical. Your trading system is failing. It either needs major adjustments or a complete overhaul. No system at all? Then building one is your top priority. Join my Telegram channel, click the link below. There I break down exactly how to construct a robust trading range. Perfect profit secured. Now, no reason to push further. I've maximized the setup. Moving on. Now, I'm applying core technical analysis principle. Trading resistance again, but first, let's identify the level. Previous sell-offs with concentrated volume will help define it. Those accumulation zones create reliable resistance. The key reference is this large red candle, as you can see. The midpoint typically anchors the level. The subsequent downward momentum reinforces it, because, as mentioned earlier, this zone represents concentrated sell-side liquidity. Back to our main topic, guys. Having a trading system is great, but you will still lose money if you jump in between time frames randomly. You rush decisions in excitement and you break your own rules. I've seen it hundreds of times, guys. Beginners can't wait to place trades and feel the adrenaline rush. Can you blame them? Nah, I don't blame you guys. But when you get your first wins and see your balance skyrocketing, the temptation is irresistible. Already $162 in the bank. Amazing. Already made enough for a nice dinner. But I'm not stopping here, guys. Let's try to squeeze out one more trade. Okay. Price has moved slightly higher now. This was just a pullback from our previous level, but I heard there's another resistance zone. Here we might see another rejection. You are seeing clear resistance forming here. Earlier, there was a strong bullish spike with heavy momentum, and now this entire zone is creating selling pressure on current price action. Just look at how this candle is reacting at this exact level. Guys, every trade you take must align with your trading plan. You should enter with complete confidence. If current market conditions don't match your strategy criteria, wait for the next setup. No matter how long it takes, just wait. Never compromise your trading rules. Look, price just spiked against my initial expectation. But because I stuck to my plan instead of panicking, we are now seeing the pullback I anticipated. What's in critical moments ago now confirms our analysis. In fact, this trade is shaping up for a solid profit. Ooh. Excellence, we've crossed $300 in profit. Now let's scan for fresh opportunities. This setup mirrors our previous trade, but with stronger trend momentum, we need to map its trajectory, identify the reaction points, and then simply open short positions from them to profits. Now let's address another profit killer, blind signal copying. I don't oppose this approach when you are just learning. For example, in my Telegram channel, I regularly share trade signals and host live trading session with my students. So the link is in the description, join. But my goal isn't just to help you make profit by copying signals, but by trading alongside me. And I hope you are learning to trade and sharpening your skills. Otherwise, you'll remain forever dependent on external advice. And what will you do when the signals stop? Or on days that I don't post them? Nice signal just triggered. Taking profits. Remember, I too started by learning from others' trades. My first investing Bible was Buffettology, decoding how Warren Buffett picks stocks. Wow, I was mesmerized that buying shares could build such wealth. But let's return to trading. Short position activated. The prominent upper wicks on this candle indicate strong downward momentum and is building in the markets. After reading that book, I devoured every trading resource I could find, dreaming of a market mastery. I immersed myself in investment literature and fundamental analysis. My early trade actually went well. I consistently locked in profits. I vividly remember my first winning streak, $300 earned in just 5 days. Modest by today's standard, but that success fueled my passion. I convinced myself that investing more would mean earning more. So I deposited $1,000 to trade with. That's where I messed up and nearly lost all of it. I felt like a complete fool then. What was I even thinking? Those words haunted me for months. But this time, it's different. Just closed another profitable trade and now I've made back that $1,000. Back then, I blamed everyone, my brother, analyst, anyone but myself. That's the worst mindset, guys. Own your decision and you learn from them. All right, team, back to the charts. I'm entering another shot. The downward momentum persists and this price action looks exceptionally convincing. After that failure, I couldn't stay away from trading. I had to come back convinced I had learned my lesson. I started building detailed plans, daily targets, weekly goals, monthly roadmaps. And guess what? Blew it all again. Pathetic, right? I really wanted to close out the week with my planned goals. Knowing that I was just one profitable trade away from cherishing my targets. So guys, I was desperately hunting for that perfect setup. Cutting corners on my own rules, rushed into a sloppy trade. Time was running out, but my profit target wasn't. So I hurried. Opened one losing trade after another. Will this time end in red too? That was the question. Oof. No, by a hairbreadth. Sure, but it's profitable trade. Another one, and the balance is now almost $2,000. So here's the hard truth, guys. The moment you start bending your own rules, losses come hard and fast. Entering another shot, significant divergences prices are forming, the trend is weakening, and market sentiment is decidedly bearish. Here is at points forming massive upper wicks. Clear evidence of seller dominance in the market. Now let's talk on the rated trap. Binary option, the ugly truths no one mentions. They are rigged against you by design. Such trading demands complete dedication and laser focus. Zero distraction allowed. Your undivided attention must be on the chart, nothing else. Isn't that sick, right? Don't trade family arguments, don't trade, otherwise expect disastrous results. Guys, check this balance growth. I just started with just $1, now look at this. But remember, even this perfect entry, you see the huge gap from our entry points, it can vanish in seconds. Market humble everyone. But not this time, guys. Unbelievable. 3,500. Mind blown. Should I push my luck? I've already made solid profit, guys, but the chart could reverse any second. I'll risk it, but not the full amount. I'm keeping $500 as a safety net in case the trade goes south. That's it, guys. The short signals are exhausted. One-way moves never last forever. Price has hit support, and we should now expect either reversal or an upward correction. This level aligns with the last significant price low. 1 minute is all we need to capitalize on this bounce. Guys, I'll say it endlessly. Trading this way regularly is financial suicide. This video is just a demonstration. My real risk is just that initial $1. Now there is a real risk this entire run could unravel. The price action looks way too shaky. This is exactly why I insist that discipline and money management are the only key to long-term success. Whoa, holy reversal. I expected a bounce, but this surge just obliterated my expectation. This is insane, guys. $6,000 from just $1. Alright, guys, after that, it's definitely time to cash out. I'm closing all trades, taking a breather, and then we'll recap this madness. Phew, that was quite an emotional roller coaster. I hope you enjoyed this video. If you did, don't forget to hit the like button and click that bell icon so you won't miss future content. Remember, my opening question, in what situation are you guaranteed not to profit? Now, compare your answers with mine. If you're only blaming because lack of experience, unfavorable market condition, you are missing the point. Skills can be developed. That's exactly why you should subscribe to my Telegram channel, follow my YouTube channel to keep learning and improving. I truly hope I've managed to change your perspective today. It's been a pleasure trading with you all. Until next time, take care and stay profitable.